And we are live. Welcome back to another episode of Palantir Weekly.
No. Seriously, dude. Seriously, just stop, man. What is with
Welcome
that
back,
stupid
everybody.
bell?
No.
Here we go. Palantir Weekly, 50 people already in the first 20 seconds. Thank you for taking time out of your precious life and joining us to discuss all things Palantir. I put number 50 in the title because I think this is our 50th episode. Might be like 48, 49, but you get the point. We've been doing this for a pretty long time. I'm here joined today with, first of all, Chris Patel, my brother, who I've been hosting pretty much every episode with for the past 50 weeks. Then we have the OG Sachin, who me, Chris, and Sachin did the first Palantir Weekly back in February 2022. And then we have Matt Money, who's basically become a regular on this podcast, someone who uses Palantir at his day job.
Good evening.
And is able to give us a lot of insight. We've got a lot of stuff to talk about. Palantir closed today at around 740, 750. It is up pretty nicely over the month. We have a Microsoft partnership. We have a Cardinal Health partnership. And we have FoundryCon, which apparently it happened like a month ago. And now they're doing another one going into February. So a lot of stuff to discuss. But before we get into any of that, I want to discuss the market. Palantir is up. The market is up. S&P at 406. Tesla's up 64% in the month. SoFi is up 47% in the month. This day was one of the best days for the market in the past couple months, really, the way it's rallied. Let's start off with Sachin. What are your thoughts on the state of the market? Is this a bubble? Is this fake? Do you like this? Are you buying? What are you thinking? What do you think is going on right now?
So, hey guys, everyone, good to see you all. First thing is, I have no clue whether the market is in bubble or it's a real rally because there has been a lot of comparison has been made with past charts that this is a kind of a bear market rally. But the fact is, guys, we don't know until we see it through. Okay, so my positioning is very simple. I don't expect the market to bounce immediately 2x, 3x, 4x and then maintain it. So 60% of my position, I have covered calls. Okay, since I'm collecting premium. And I don't know, maybe market shoot from here. So what I have used is 20% of my premium. I have bought out of money calls just in case market short. Okay, I have some sort of hedging. So I don't know at this point. In terms of investment point of, I'm 100% long because my view is that some of these stocks, which have already declined 80, 90%, even if they go down, the probability and the amount they will go down is lower amplitude compared to what they can go up. In terms of individual performance of the stocks, as Amit was saying, I haven't seen anything outside Tesla or yesterday Lucid, which I would say I can attribute at this point news or activity related to companies. Pretty much like market going down, market going up, and Palantir is in the same tide. We haven't seen any impact of any of the news. Back to you, Amit.
Okay, Matt, your thoughts on what's going on in the market?
Yeah, for sure. I think one of the main catalysts that we've kind of seen this week specifically was, and I mentioned this via a chat on one of another regular podcast that I listened to, Ryan, who's an independent investor. I basically said, I think the catalyst that we're seeing is more around the several of the other nations' central banks have denoted that they were going to pause some rate hikes. That does not mean the United States has signaled this, which I think is what was confused in the previous conversation I was just having. But several, I forget which nations they were. I think it was like the Bank of Canada and another European bank that have actually stated that they're going to pause for the next year or so and really understand what's coming through. So I think that is a bullish signal that maybe folks in the United States are pushing into the U.S. equity side. Now, I'm pretty confident that while we've seen a pretty good run, and you had said it, Amit, some companies are seeing 20, 30, 40, sometimes in the case of Tesla, 60% in the last few months. It's pretty impressive to say the least. But I think that there will be continued volatility going into next week. We still have Meta, Amazon, Google to report at the end of next week, the FOMC meeting, which will convene on the 31st. And then the announcement will be, I think it's on Wednesday on the 1st. So we'll see what really happens next week. I'm anticipating a 0.5 point hike. Some folks are forecasting only 0.25%. But regardless, I think there's going to be some further volatility. I don't think we're out of the woods, but I think the thing that's important to note is that we're out of, at least if you look at it from a technical analysis, we're out of that crazy downward trend. Now, I don't think that is going to be potentially sustained until we go above 4,100 on the SPY. if that makes sense. I still think we're in kind of a territory where we can continue to oscillate up and down a little bit. And I anticipate, because we've had such a good bullish run, we'll be pulling back over the next couple of weeks. But I'm confident that the worst might be over. I've been saying that for a little bit. Could we go back down to the high 300s or something on the SPY? Potentially high 3000s if you want to talk about the SPX. But I'm anticipation that this February meeting is going to be highly important. The March meeting is going to be highly important. And depending on what really happens on those two, you can really start to understand at what point the market will start to have some relief. That's just my sort of thoughts.
It's interesting at this current Fed funds rate, we're paying $853 billion of interest. And if we raise it to the level the Fed wants it to be, we will be doing a quarter of the 4.9 trillion we collect in taxes just to pay for the interest on the 31 trillion we have in debt. So the Fed has a very interesting decision to make as we get into the new year and what happens with the market. Chris, anything you disagree with Sachin and Matt on? Anything new to add, or pretty much the same?
No, I just think that right now is a great time to be opportunistic with certain names that have been beaten down, oversold. Just right now, one of the reasons why I was stockpiling cash for the last 6 months was there were going to be opportunities where high cash flow companies that literally had to just pull a few levers to get to a point where they're really back to being somewhat profitable again. All they had to do is just pull some levers. So here's some good examples. You had a lot of the FANG names that had overspent during COVID with a lot of hiring. Anyone who's anyone knows that. They could see it. You could see Google almost doubling their headcount in the last 3-4 years, Amazon doing the same thing. So there was almost like an arms race when it came to employee hiring. And so the running joke was that people were getting hired not to work, but so that your competitors couldn't get to them also, which is really dumb, right? Because at the end of the day, it's not a business model. It's literally like just short-term warfare against each other. So now that that's coming to an end, there are a lot of businesses that have taken significant hits. Like Meta's taken a significant hit over the last year, and they did what they have to. You have to do some course correcting, right? Now the thing is, those course correcting results are not going to show up like 10 seconds. Like, it takes some time, like a couple of quarters, maybe a year. And so all that money literally just goes right to the bottom line, right? So right now, Meta laid off 12,000 employees. If you look at how many billions they're going to save because of that, and then all the capital spending that they were doing, all the money that's saved behind that, all the massage therapists that they laid off from their campuses, all that money is going to add significantly to their bottom line, which means that that's going to free up money to basically use for business operations, and primarily probably something like share buyback. So if your stock is undervalued so much to the point where it's like down 70%, it's just stupid not to buy back shares. So I think that's what we're probably going to see in the next year or two to support the stock prices for a lot of companies. So I've just been adding here and there where I see opportunity, especially if I see that things have been mispriced significantly. And I just, like I said, I'm not even though we are likely to go into a recession, and it's hard to say that we may not already be in a recession, I think that there are still pockets of opportunity there. If you're willing to risk some capital right now, you could probably see some outside gains. Like Tesla was one of my bigger positions going into earnings, because I was like, oh, at this point, you're looking at a company that's making all the right moves. They're still growing, yet they're down almost 70% from their all-time highs, yet their businesses are operating very efficiently. So it's, you just have to be ready to jump in when the time comes, and be ready to just put your money aside and sometimes, and this is the mistake that I've made in the past, is just because you like a company, its technology, all this stuff, just like I love Palantir. If the opportunity cost is, if the company is not doing what it's supposed to, there's an opportunity cost that you may be missing out on. And that's the kind of thing that if you're a good investor, you'll always be scanning the market saying, you know what, this is my portfolio. These are the stocks I'm investing in, but what am I missing out on by storing my money in this one company. Does it have the potential to go exponential return? Yes, it does. But is it there yet? How far are they from that exponential growth curve? Are they executing? Are they not slowing down in their business? So all those things, when you factor them in, it just means that you have to be good at allocating capital.
Sachin, you want to get in on this?
I think there are 2 points which are, or I would say like 2 of my opinions which I have built. So when I see, especially like in terms of Google layoffs, I see it is a bit different than what rest of the tech industry has done. So it was expected that the company has to lay off people, but the way they have done it and the size they have done it, it also looks like that there is an internal strategic shift. And that strategic shift is coming because of increased bet of AI made by Microsoft on OpenAI. It looks like that internally in Google, they decided to bring some timelines forward and they understand they need to be more efficient. Okay, so it's just not tech layoff. I mean, in terms of Google, my understanding is there is something else changing. Okay, Google has 3 challenges right now. The first thing is, like I have always said, that Google has one of the best cloud service available in the market. Okay, there is no comparison what they have with AWS or what they have with Microsoft. But AWS is the biggest and Microsoft is the fastest when it comes to growth. Okay, so there is a go-to-market issue that Google is facing, and a bit of that is an identity issue as well. The second part is, I think it's an open secret that everyone knows that the language model, the large language model, what we call it, that Google has is far superior to what OpenAI has in terms of ChatGPT. The question is that how to monetize it and how to productize it. Okay, and Microsoft is the world's best commoditizer. Okay, if Microsoft bring a technology which is good but yet inferior to Google at a very cheap price and in a very integrated way, the idea or the plan that Google has to rake a lot of premium on premium AI is already gone before it is launched. So that is the trigger point. I see that Google has to move things fast and in a more different way. So yeah, I mean, I expect a very ruthless fight between these 2 companies moving forward, and at the end of the day, people like us will be a winner out of it. So that is the second part. Like, I think Chris made it very clear that in terms of the opportunity cost, I think we have already discussed this. You have to do investing in a way that you can sleep without any issue, and everyone knows that what kind of investing make them sleep well. If you are too excited or if you are too anxious, your investing strategy is not working for you. Okay, and everyone is different and everybody is in a different state of life in terms of financial exposure and financial position, so they have to cater for it. Another point I think that both Matt and Chris has brought forward is that when we talk about like, okay, that economy going into recession, it doesn't mean that all the companies going into recession as well. Okay, that means what is happening if your economy is going into recession, that the companies who are spending money, they become more cautious, like where to put their dollar. Okay, and when it comes to put their dollars, they want to invest in an area which gives them either the larger market share or better cost efficiency. So certain companies will be benefited out of it. Okay, we just need to be very clear when we listen all the learnings that what is next 2 quarters or an yearly plan that CEO is saying that their focus will be. If we start filtering down the focus, we can still filter down very easily that which sector are going to be the more investable. What I understand with my limited network and the discussion I'm having, that tech in spending is still increasing. Okay, what is happening is that tech spending is increasing, but it is getting very concentrated. That means the companies initially, when they were doing pilots, they were spending money on 30 companies. Now they're saying that, okay, enough is enough. We are going to invest more. We're going to spend more, but on these 5 players only now. So that's the major landscape is shifting. We will see a divergence in the tech landscape in terms of how the revenues moving forward will change from one company to other.
Google's not going to focus on glasses as much as they're going to focus on competing with ChatGPT now. Let's get into the first biggest news of the week. Palantir has officially partnered with Microsoft. Through this new collaboration, organizations will be able to quickly deploy Foundry, their ontology-powered operating system for the modern enterprise, as well as being able to unlock further value in Azure data services with Microsoft's cloud scale analytics and AI solutions. Palantir has now completed the trifecta of working with the 3 biggest cloud computing companies on the planet They partnered with AWS back in September 2021 to do the exact same thing they're doing here. Google, GCP back in June 2022, and now Microsoft. Now, the interesting thing before we get into this,
before you, so technically it is 3, but don't forget about their partnership with IBM, because with Redshift, you're also getting on-prem / hybrid cloud, right?
Yep.
Which I think a lot of people are like, they only like, oh yeah, there's only 3 cloud guys. Yes, that's true. Those are the 3 main ones, but you also have to remember there's on-prem stuff that a lot of Palantir's clients that utilize it, especially in the government space, that don't necessarily want their infrastructure to be hosted on a hyperscaler. Sometimes they want to maintain their own stuff.
Yep.
And that's one of the key benefits that Palantir has, that they're actually able to do that, where they're not just focusing on the cloud. They actually have on-prem solutions as well. Sorry to interrupt. I just want to make that clear.
That's good. And
so just to add one more thing quickly on the point Chris has made, guys. Anywhere, any industry that has data residency issues will be largely dependent over a lot of work will be on the on-prem. I mean, if I talk to my oil and gas clients and we show them that this is the SaaS, they said, dude, what you are talking about? We are not going to move any of our critical data on the cloud. Everything will be on-prem. So on-prem is a very large business in itself. Okay, world is not US or Europe. There is a lot of complexity that goes around it. Okay, so on-prem is actually on-prem data at edge. They will have their own utility, and that is outside the that's why AWS has what they call like Outpost. Okay, they are also in on-prem business. Okay, so this is quite a big sector, and and I completely agree with Chris on this, that with IBM they have a strong offering there. Back to you, Amit.
And one last thing, even Snowflake, who wanted to say that they're only going to be cloud supporting, that's it. Even I think as recently as last year, Michael Dell gave them a call and said, listen, through VMware, it's like, listen, you also need to consider this. And so they actually now have an on-prem solution as well. So I think a lot of times we want to just focus on the hyperscalers, but I know that there are a lot of companies who probably in the last 2 years, they've decided that screw this, paying all this money to these other companies like Google and Amazon and Microsoft, and let's just do stuff on-prem, because the cost of maintaining on-prem has gotten to the point where it's much, much cheaper than all the money that they're paying to the cloud provider. So how do I explain it? So it's like some companies, they tried switching to almost all cloud kind of like architecture, and they realized that it actually ended up costing them more. Right. So they ended up saying, you know what, screw this. We'll go back to supporting on site on the. So that's why if you look at IBM's been somewhat growing, like especially their Red Hat division. The Red Hat division that they acquired grows very well because they can actually have hybrid cloud. So a lot of companies are choosing to actually almost in a way go backwards a little bit.
So having said that, cloud computing, still a really big business. AWS, like 62 billion in revenue. Microsoft's growing. ChatGPT is built on the cloud. So still a big business. Palantir now being a partner with Microsoft obviously is a hopefully big role for their distribution and go-to-market strategy. So let's start off with Matt on this one. What is, and I want everyone to have a chance to speak. So I'm going to try to limit everyone to about 5 minutes here, just so we get everyone's take, and then we'll get more into discussion. What was your high-level overview to this partnership?
No, I think it made me think initially, right? Because initially I went into my thought processes, which was wrong, my initial thought, which is, Microsoft is giving up their personal sort of custom software creation and stuff of the like, right? Where, I know Microsoft a couple months ago labeled that they were going to start trying to create custom software for logistics and stuff of the like. And that's where initially my mind went to. And then I started reading more into it. And it was more specifically towards, like you guys had mentioned, being a partner on the cloud services. Obviously, a lot of data getting sent from data lakes and needing to be stored somewhere. So now you're obviously able to be working with companies that either use Azure or AWS or Google Cloud. Our company personally uses Azure and AWS, right? So having that capability to immediately, have that initial sort of compatibility between the two companies is now a blocker that may now be lifted, right? If somebody only specifically works with AWS or only specifically works with Azure. So I initially my thought process was, Microsoft's kind of throwing in the towel. And then I kind of read through it a little bit more, and it's like, oh no, this is actually pretty good doesn't mean that Microsoft still can't come out of nowhere and kind of create these custom software applications like they were doing for the logistics piece, but at least eliminates sort of a blocker. And now you kind of have the three largest players in cloud being enabled. So it really doesn't make any sort of blockers from people signing up being like, oh, well, we only work with Azure, so we can't really utilize you guys, or we'd have to sign up a contract through AWS or what have you. So that at least is my interpretation. And hopefully you guys can educate me a little bit more. I'm not really into the whole back end stuff like you guys are, but I'm more into the interpretation side. But I just wanted to note, in case anybody else out there was thinking, oh, does that mean Microsoft's throwing in the towel for custom software? They're kind of pulling back on sort of the AI stuff. And I still don't think that means that. I think this is specifically towards the cloud services piece.
So share the screen that I just put up on it. So this right here is a perfect diagram of why Palantir is actually one of the best places to be. This whole thing is called Sky Compute, right? And you can, Coach Strap did a video on this quite some time ago. And this is actually very important. So you can see that you can have all sorts of different clouds. Each cloud has its own strengths, right? And because of that, people want to utilize almost like little bits from Azure, little bits from Google, little bits from Amazon. Now, the thing is with Palantir, you don't have to, Palantir is like, bro, whatever, it doesn't matter to us. Even private cloud, which I said the on-prem thing. Those kinds of things are what Palantir is going to be very good at in the future going forward. So this is what I would equate it to, basically, So this is like one of those things where you kind of want to have.
So what are your overall thoughts, Chris, on this one before we move to Sachin? I mean, are you excited? Do you think it's good? Do you think it's a nothing burger? What do you think?
To be honest with you, I'm surprised that they announced this now as some sort of like, oh my God moment. I don't necessarily think that it's that level of oh my godness, because I'm pretty sure that they had clients who used Azure before. This just means that now Palantir services are available in their marketplace. So I like I said, I'm not 100% sure how this ends up affecting their business. It may just be a nothing burger, but I would say you'd have to ask Palantir to say like, okay, what is the benefit to you guys in terms of sales? Like, will this help enable sales and drive adoption? And I think it will. That's the whole point of this. You want to get more people to be able to adopt your processes quickly and seamlessly. And if it's now available in a marketplace, that means that adoption is just much, much faster. But this is something that I would probably let Coach Strap elaborate more on than someone like me who has not as much experience on this.
So I can add a little bit on that based on the two disclaimers I have to make before that. Hey, Matt, which part of BP you are, upstream, midstream, or downstream?
I don't necessarily work for BP, but if I did, upstream.
Okay, upstream. And are you in interpretation?
I'm a reservoir engineer for the Deepwater Gulf of Mexico. So
okay, perfect. So I'm just asking because I'm a geophysicist and that you can back me up with my example here. So okay. So guys, I mean, I can tell you about, so few of you know that I was briefly the data strategy lead for data insights for Schlumberger in 2021. I left it. And then I was handling the same role more as a project and as a consultant last year because I wasn't willing to move to London. So I'll give you an example, okay? And this is a real example, like, so what is happening in energy industry? Okay, you have midstream, upstream, and downstream. Okay, three different, okay? Now, when you talk about upstream has a lot of different domains. You have drilling, you have productions, okay, which is more time series data. Then you have reservoir engineers, which is more pressure simulation data. You have geoscience, which is more seismic. So you have all kind of data and simulations you run. They're different, handled by different domains. So this is where we're talking about a technical data. Okay, then you have data which is going into supply chain, finance. Then you have all the unstructured data that goes into all of this. So is there a platform that actually manages this within upstream? The answer is no. Now, when you're looking for a company point of view, okay, for midstream and downstream, then the same question goes, like a lot of portion is handled by AspenTech, some are handled by other companies. So these platforms, a lot of time they have their own proprietary database. A lot of time the companies have built, like in this case, like Schlumberger has built for upstream or Delphi. They have a production data foundation. So they have a lot of data foundations and a lot of data structures. The question is, at the end of the day, what a CEO would like. CEO would like following. There's something I can access all of this database, something that allows me to integrate this database with the market data, something that allows me to integrate these two databases with all the productivity data that goes on Slack, email, and everything. And can I use this data to go for new energies like renewables and all that? So this is not happening. You will never get one database for all of it. But what CEO is actually working, that can I access all of this data in one go? And that is where Palantir comes. Palantir's tagline, when they say that they want to bring compute to storage, they are saying, why are you wasting your time in building all these segregate database and effort in what do you want at the end of the day? You want at the end of the day, can I access it for my analysis or not? And while I'm doing it, can I honor the accessibility, the authorization for the right person, and the data residency requirement as required by companies in different complex jurisdictions? So that is the value that Palantir can bring. So you can do a lot with one particular use case and with one particular data case, but the moment you start integrating complex use cases across the organization, then working with one provider, okay, and expecting that you will have one single layer of truth in one place, either at prem or in, that is not happening. And industry has sold it, and industry is trying it for last few years. Okay, nobody has done it. Okay, so at the end of the day, that is their value proposition. Okay, whether they, how well they do it, we have seen some of their examples. Like for example, in the case of Tyson Food, we saw they already had 20 plus tech partners for which they were working in the digital transformation, and it was not working for them. You need something that puts everything together. We saw in the case of BP. Okay, I mean, I saw from outside, I had opportunity to spend time with ex-CDO of BP, Gavin. He was in the same team with me in Schlumberger when I was there. Now he has moved to, I think, a different company as CDO. What I learned from all of this in journal is that when it comes for integrating the complex use cases and data from different domains together for visibility and analysis, we are finding it very tough that anybody can match Palantir. Now, can Palantir take it? Okay. Very openly, and everybody can appreciate the value. Like for example, we saw in the recent incident in WEF when a CEO is asking that this is too good to be true. That's their weakness. That's they need to sort it out. Even recent discussion when we were discussing, I was having a meeting with Palantir, a couple of employees. I mean, senior employees. I shared the same thing. It's like, we understand your strength, we understand your weakness. We hope you'll work on your weakness moving forward. So that's the value that is going to bring in. That so many players, but who is going to play that integration layer as Chris explained? And I think it will be good to know more about CodeStep because he can even go into further details of it. But that's the value that should come on the table. Back to you.
Sachin, I want to ask you a question here. You just said when you were speaking to the ex-CTO of BP, obviously Palantir works with BP, they said it's, Palantir is that integration layer that allows them to get the time to value that they need for them to do stuff with for them to have any meaningful progress with their business. And your argument here is that just like in 2006, Amazon said, let's put it in the cloud. And then there was this gold rush of companies trying to figure out who are the winners. And obviously, we got 3 of them that really, really capitalized on it. Is your argument that integration layer in the next 10 years, well, here's my question to you. In the next 10 years, will the integration layer be more of a gold rush than selling cloud compute? And if it is more of a gold rush, is there anyone else other than Palantir that you think has a meaningful chance to grab it?
So the answer is in 3 parts for this question, Amit. Okay, the first part is that when we talk about because you made an analogy with AWS in 2006. Okay, when the AWS has done the 2006, this was a fundamental shift how the business is done. That means your CapEx, you have the opportunity to convert it into your OpEx. Okay, so what is happening is you have an upfront lot of CapEx, but now moving forward, you have more OpEx, but your CapEx has practically gone.
And why exactly did it go from capital expenditures to operating expenses?
Because if you are having your own warehouse, you will invest money to buy it.
Got it.
But if you're not buying your own warehouse, so basically what is happening, so that allowed a lot of companies to actually go for it because they, especially startups, they don't have a lot of money. Okay, so that's why the CapEx to OpEx was a fundamental shift. Okay, now everything has a limit. So what is the limit here? That you went from CapEx to OpEx from a point of view so that your cash exposure in the starting is low and you can create value. And in a lot of use cases, people have created value out of it. But at the end of the day, you don't stop. You're always looking for continuous improvement. And how you create the next tranche of value is by handling complex use cases.
Yeah.
So for example, like you have seen suddenly that the war between Google and Microsoft has gone into another level. So if you are going into an AI war, what is happening in the background? That means you are going to use a lot of compute power. So your infrastructure wars become even more steep in this part. Okay. Now, when we talk about, now let's talk about what is Palantir creating a fundamental shift.
Yes.
Okay. So Palantir is saying that yes, you all have done digital transformation. You all guys are on cloud. You have data on-prem. But is it what do you want? You want to manage data or you want to create value out of it? So what is happening? And we refer to this study several times of Gartner that 87% do-it-yourself solution fails. They said it's not about just getting data up there. Okay, it's not about just building dashboard. At the end of the day, you need three things out of it. You want to fundamentally disrupt what your value chain for your whole business look like. You want to deploy AI at scale. Okay, and you want to have an extreme, what we say, like there's a technical limit. That means how efficiently, if everything is fine, a system can operate. And then you have an operating envelope a lot of time that how it is actually doing. You want to reduce the gap between these two things. So that is what the Palantir is trying in terms of making a fundamental shift. Okay. So in a way, yes, it does exist. And I wouldn't call it AWS in 2006. I would still call it even a 1 or 2 year further to it. Now, the third part is, if this gold rush start, can Palantir capture it? So it is given that this gold rush will start. I think we have seen like a simple case of ChatGPT. Everybody suddenly saw use of AI and everybody is onto it.
Yeah.
Okay. So use cases that the gold rush is about to happen. There is whether Palantir joins the party or not. That's a whole different thing.
And real quick, before you continue, that gold rush you think will be more valuable because it's actually understanding your data versus just cold storing it. You do think there's a little bit more upside there.
So my understanding is that gold rush already started in the last quarter.
Got it.
Okay, because see, you can only milk something up to an extent, and then you need something else to milk. So companies have already milked the digital transformation as they could have done. The whole idea of generative AI, you may not realize, like even I don't realize at a lot of times this point that how much disruptive generative AI is. Okay, and we can discuss this at some time in great length. But what is happening is that now companies are under pressure to show more earnings, more profits. Okay, they have to be more efficient. So they have to be physically more efficient. And they have to be efficient more in terms of generation of cash in the balance sheet and the income statement rather than just showing the stock price. So that gold rush has already started. Okay. Now the question, and this is the biggest question, and this is a question even I don't know what the right answer is, that can Palantir capture it? Okay. Now there are two ways Palantir can capture it, is by going by themselves. Like for example, they have done in the case of Tyson Food. The second way Palantir can capture it is be with the strategic partner like Microsoft, Google, Amazon, and IBM. Okay. Now, if Palantir capture this gold rush with strategic partners, that means they also have to give some of their value to the strategic partners. Also, they get some of the business from the strategic partners. Given the size difference between strategic partners together, which is like 4 to 5 trillion, versus the small company, which is 15 billion, I think it's a fair statement to say that the value extraction that Palantir will get out of those companies versus what they get out of Palantir, I mean, is an imbalance, and probably Palantir can extract more value out of it. Okay, so the thing what Palantir have to focus is that within these companies, people are aware of their products and they are using their products and promoting their products to their client. Because as much I know, a lot of people within these companies are not aware of what Palantir products are. And a lot of these people are also not comfortable at this point. Okay, because until and unless somebody in Microsoft has a Foundry certification, how the hell he is going to promote Foundry to his client? So how fast you can upgrade? I know this because I have seen it. I have talked to Palantir about it, that why in a certain company Palantir products were not being promoted by. Okay, so there is a Palantir has to put a lot of effort with their strategic partners that their people are actually certified and their people actually know what the product is. See, salespeople are like, how do I say? They are frenzy. They go out, they want to sell. So if they know what you can do, they would love to sell it to their clients. So that's an effort, but Palantir has to put to capture that imbalance. Okay. If they don't do it, they don't capture that value. The other part Palantir can capture this value is by making direct sales to the client. Okay. And the kind of product they have to focus a lot on the top down selling. They have to go direct to the CEO. See, this is the value we can create to you. Okay. So why we go through 20 layers of procurement? You take our use case, get it validated by your team. Okay. So it has to be a very top down selling, especially like Karp said, that we charge a lot. You want to charge a lot, you have to show a hell lot of value, and the whole hell lot of value you don't show to a person who is handling a P&L of 500K. You have to show to a CEO who is handling a P&L of $20 billion. And their GTM in both aspect, that is upgrading the sales and the technical stuff of their strategic partner, is a bit of question mark at this point. And their approach on a mass level to reach C level for top down selling is also has seen a lot of headwinds. So these are the two things they need to improve. The gold rush has already started in this part.
Yeah, I would say the streamlining of being able to, for example, if I wanted to find a piece of data from a certain valve or a temperature from a certain valve, I would have to go to some individual who used to work for Gavin. They would give me basically, that particular tag. I'd put it into some clunky thing that was an add-on to Excel, and sometimes it would work, sometimes it wouldn't. I'd have to go back to that person. That valve or that tag doesn't work. So, but now, and all I have to do is I just have to search for a specific thing within Google Chrome while I have the Palantir Foundry database kind of open, look for the data, and it has a title to it. Every tag has been labeled appropriately. So if I want to look specifically for it, I can do that. I don't have to go to some special individual that has a catalog full of tags or anything like that. But another thing I want to highlight that Sachin mentioned specifically is the integration of all these different disciplines and making it seamless. That's very difficult to do, right? And Sachin knows this very well. I've seen great results from looking at time series data and being able to have AI comb through time series data to be able to analyze things that might have taken me 2 weeks over the course of, say, reading a 20-year well history, can now kind of highlight things in snapshots in the matter of minutes. And then I can go and certify and kind of look more in depth to kind of make sure that what is coming out is appropriate and kind of make conclusions on that. That now has been shrunk down to a matter of less than a day to be able to do something like that if the data is being used appropriately. Where I have yet to see things come in very well with the use of Palantir, and maybe this is something that you've seen, Sachin, so I'd love to hear your opinion on it. Maybe this is getting too in depth in the oil and gas realm, more specifically the upstream part of the oil and gas realm, is interpretation of seismic or anything of the like, right? I haven't yet to see a software other than manual work to be able to interpret seismic. And being able to integrate that with time series data like Palantir might be trying to do will be very difficult because, like you said, they are two very different lenses of data, and how you look at them and interpret them are two very different things. So it's not a one-size-fits-all sort of solution when it comes to Palantir. For example, you have to create custom softwares. And thirdly, and then I'll hand it back to you guys, the ability to model an entire facility, which has hundreds of thousands of pieces of piping, valves, everything of the like, in a digital twin aspect in Palantir, and be able to run models to say, oh, we can gain efficiencies by rerouting this and that, and not actually having to trial and error that on the actual facility themselves, and keep that facility running as most efficient as it can for the time being, and then say, oh, okay, yes, let's take that step to take it down, because we know based off of our digital twin, we would be able to see an efficiency of 100, 200, 300 barrels a day, sometimes even thousands of barrels a day, or be able to produce more water, which could allow you to open up some of your wells a little bit more if you're water constrained, which is a huge thing in the deep water Gulf of Mexico. Those are things that you be able to do in, say, Palantir without having sometimes some of these facilities, like some of the facilities I work on today, are making 60, 70,000 barrels a day. Some of the other ones in our portfolio make 200,000 barrels a day. If you shut that down for a day, 200,000 barrels times, 50, 60, $100, that's a lot of money to be able to defer out into the future, right? So you'd want to have something like a Palantir be able to help you understand if you're taking down that facility, which is a very valuable decision to do, that you're making the right decision and you're not doing it for nothing.
And just to be clear, like if you shut down a platform of 200,000 barrels, you just don't open it tomorrow for 200,000 barrels. It takes another 5-6 months to bring it back. It's a lot of money on. So something what Matt said, let me just make it simplified for everyone. And Chris can also relate with it. Like, so Matt said in a case like which is upstream, which is having the imaging data. Okay, the relevant or the analogous for that in medical is what you call like MRI. The only difference between an MRI and seismic is that MRI is based on electromagnetic equation, or you can say diffusion equation, and the seismic is based on acoustic equation. Okay, so this is imaging. Imaging is something that means you take a very detailed snapshot of anything at a time, like somebody takes for your brain. In this case, we take a snapshot of Earth. Then the time series data is, that means now you are producing from field. That means there are things changing, there are fluid changing, there is changing in terms of overall compressibility of rock. So that is what constitute a time series data. And I don't know, Matt, you have seen a few days back on LinkedIn, I published an article that we need to kill the zombie projects. And the project which Matt has mentioned, it was a project I had in mind because I have seen it in a lot of companies that are trying to do these projects and keeping it alive, but they're not getting any value out of it. And the reason for that is that fundamentally approaching the problem in a wrong way. So can it be solved? Yes, it can be solved. The key here is you do not want to solve the whole problem. You may want to solve a particular part of it. And based on my experience, what I have seen, and I may be biased in this part, but I don't see any other company other than Palantir solving it. Because the reason for that is when Palantir approaches any use case, they approaches in terms of process, that what process is happening and what is the business problem, which a lot of other players don't do it. Okay, it is one of the toughest problem to solve, but I would still bet my money, and I'm working in the industry. I'm trying to help my clients to solve this problem, at least in some portions. Okay, actually, I'm currently working on a project helping to solve a similar problem with a client. But yeah, so when we talk about this complex use case, so just to put a dollar value, if you ask me that if industry can solve this problem, the dollar value on this is $100 billion plus.
$100 billion plus.
$100 billion plus. And
so
when I say $100 billion,
why is Carp saying $900 billion TAM then? Is there,
because even $100 billion is for client. How much client? I mean, Palantir
he said 100 million for the client. That's the problem that they're trying to.
Okay, you're saying 100 million for a client, an individual client. Gotcha. Which I was just about to ask. Do you think that gold rush is worth 900 billion?
So let me make it even more simpler for you. It's like, see, if a company which has 1 million barrel production, okay, let's say if you are doing this, okay, and we are not saying time to value or anything, that we say that even if you save like some money out of it, okay, and let's say $2-3, okay, I'm making a very simple adjustment at this particular point across the value chain. Okay, that is, you can say $2 to $3 million a day. Okay, if the world oil and gas production is 100 million barrel, and I'm not going into gas at this point or anything, and let's say even 40% of people is trying to save even $1 and $2 based on it. Okay, we are discussing a TAM here. We're discussing that is $80 million a day.
Yeah,
that is one problem of using the time series data with imaging data. Okay, then you have managing your technical efficiency versus your operating efficiency. That's a whole different thing. Then when it comes for retail selling, that means if I sell at 1 cent higher in this particular point at this point of sale versus other, that's a whole different use case. Okay, now in order to have capture the value, that I want to have the right value and the right stock in inventory so that I can capture that 2 cents at a point of sale. What does it mean in terms of my well pressure and water injection going back in an upstream case? That's an integrated business case we are looking. So how do you deploy it? Okay, and this is not an efficiency in terms of money. It's an efficiency that means you are getting more out of something which is finite.
Right.
Okay, so your overall, when you see in terms of, so in project investment, or what we say project financing, okay, this is what we call, I don't know how much you guys know about project financing. Project financing is a very leverage way of doing. I mean, it's a very leverage. So when you increase efficiency, your return on that leverage is very high.
Yeah.
Okay. So that money, I mean, and especially at this particular time when everybody is going for the any extra drop. So
Yep.
the value proposition is very high. Okay. Company, and this, this, I'm talking about my industry. Now, if I talk about Chris industry as an outsider, I mean, I'm investor in couple of biotech companies. Okay. I expect these companies to go like 1000x. So the use case as an outsider, what I see, I mean, it's even bigger.
What
And then you,
ticker,
like, for
what tickers
example,
are those, Sachin? What ticker? No, I'm just kidding.
these are private companies, man.
Sachin,
So,
so let me summarize one thing real quick, because I've been saying this in almost every Palantir video I do, and I want you to kind of confirm this for me. You just described an oil and gas industry example that potentially is saving $80 million a day if one service Palantir offers, which is time to value, can be implemented in a meaningful way, and that's not taking account all the other things that they could potentially offer. That's just oil and gas. We've got healthcare, we've got renewable energy, we've got government. I mean, we've got all this different stuff.
We've got carbon credits, carbon trading, the whole thing about to come. We are talking about see, and in the renewables, 1 cent can make or break your company. 1 cent per watt, or 1 cent per 1 cent can make or break your projects.
So it is the bull case, is the reason, for those that don't know, you are 101% of your US portfolio in Palantir because of the following reason. You believe there are an outsized number of verticals that have yet to have the gold rush that cloud compute has had. You have concluded the gold rush has started in terms of analyzing your data, not just storing your data. You have realized that Palantir has the most advanced software because they developed it for 15 years. They've been through a lot of things to create the system, the integration layer that can actually give clients the results they need with that data. And you believe that if there is not really any other player based on the due diligence that you have done, and maybe you messed up in this due diligence, right? But based on the due diligence you have done, you do not see another player that can do what Palantir is doing in all of these different verticals, which is if all of it plays out in every single vertical, or at least like a certain percentage of verticals, this can be a stock that actually returns phenomenally well. Is that the reason you're invested in Palantir?
I think that's a very good summary of my conviction and why I'm invested in Palantir. Okay, there are a lot of good companies in tech. I don't want to take anything away from anything. Okay, like companies like Snowflake, DigitalOcean, Datadog, they're a phenomenal company. Okay, the question, the way I look at business is that what problem are you solving? Okay, and being a part of, I mean, I have a very strong bias because I have been on the industrial sector whole of my company. I mean, like, even when I was working for Boston Consulting, most of my clients were private equity, and I do review a lot of companies because both for private investing purpose. When I see the value of cases, and when you invest, you have a view about future, that this is what the future will look like, especially if you are in a high growth tech kind of investing. So I have a view, and my view is that all of this we talk about today, now that let's build dashboards, let's build this. My view is that this is just a temporary stop. Why you do this? Why a CEO need a dashboard? Because he wants to have an insight of the data. But what if instead of a dashboard, I give a CEO that today you have to take these 5 decisions. Out of these 5 decisions, these are high trade-offs, and these are the trade-offs involved. And by the way, I have already taken 200 decisions on your behalf, which were low value. I mean, that's the end game. So when we are looking in terms of end game,
we're close to some of those things.
Yeah. So when we are looking in terms of end game, okay, the thing is, what is enabling it? Okay. And if you talk me about, and somebody talks me that can it really be done? I mean, guys, you have a case of Ukraine versus Russia. I mean, go back, like before the war has started, how many of us have actually anticipated that Ukraine can actually fight with this kind of rigor with Russia? And why today Western countries are actually supporting more and more and supplying more weapons? Because they are saying that Ukraine is actually getting more value out of it, what they are saying. If Ukraine would have wasted the effort, okay, what the Germany or what the US will think, that why we should increase our hostility with Russia anyway. Whatever we give to Ukraine will be, it will be useless. Now Ukraine is showing that we can do more than what you can giving to us with the expectation. And one of the key strategic element they have is the softwares in the background. Okay, and the piece of the software they are using. So can it be done? So this is like same case, like the CEO who doesn't want to see the dashboard, who wants to see what to do, the actionable intel. Okay, now to contextualize in terms of Foundry in commercial setting, I think there is a still, in terms of productization and in terms of brand building, a lot of work needs to be done. Because there is a very big problem in a Wall Street community is, and I'm sorry to say about it is, so when you talk to a CEO about that you should do this, the first question a lot of CEOs ask back is, who else is doing this? Are my peers are doing this? And the sad part is, if they know that their peers are doing it, then they would love to do it. But very few CEO will actually do it knowing that nobody else is doing it. It happens very rarely. So there is like, for example,
not to interrupt. One of the things I wanted to do, you know what? I'll let you finish. But one of the things I wanted to do was show you.
Did you
guys,
just Kanye West him?
100% Kanye West.
I'll
let you finish in a minute.
Wait, hold on. I'm gonna let you finish.
No.
But all this bullshit, there's no $900 billion TAM. There's no $80
No. I just
Beyonce, Snowflake had the best music video of all time.
No. What I'm trying to do is Sachin has a habit of running on. So I'm just trying to hey, I'm not the guy like holding the stick. When it comes to the Emmys where they literally pull you off the stage, but I'm like slowly nudging Sachin, like, you're beating the horse to death, Sachin. We get it, But I just wanted to talk. But if you have anything to finish up with, Sachin, go for it.
No, it's okay. I'll leave it to you, Chris. No.
Okay.
The funny thing about this is Chris is usually the one that goes on these like ridiculous like rants for a long time. And what Sachin was saying was actually pretty good stuff because we were deep into it. So it's funny, Chris, that that means both of you guys were going long. That's hilarious.
Yeah, Sachin, I'd love to give you a phone call at the end of this.
Maybe you guys should do a podcast together, do a video together. Share with the rest of us goons. We're trying to figure out
I wish
how
I could
we can make some
more
money
and
too.
more, but I don't know how much I would get in trouble with HR.
So Matt will do a live webcast, and the topic will focus is more on live, because we are the subsurface guys.
Yeah.
Okay. So we can discuss a lot about CCUS and other things. I think let's do that at some time.
Ultimately, to conclude on your point, Sachin, your argument was that there's a lot of different verticals. You think Palantir can attack them. The go-to-market still needs a lot of work. Brand building needs a lot of work. Other CEOs don't want to work. So, like, there is a thing going on in the industry where Palantir doesn't have the type of brand recognition that a Snowflake has, that a CEO will come immediately. But the thing I think we're all excited, 185 people here on a Friday night, is like, does the shit work? Like, if someone showed you ChatGPT but didn't know how to market it, but you gave it to somebody and they used it, they would be like, if you figure out the marketing, this shit's going to change the world. And I think that's the feeling we all have.
So that's one of the reason. And I wrote an article in Reddit in 2020, okay, about like my raw experience that first time when I got exposed to Palantir. And till that time, until today, when it comes for this is how when I evaluate a use case or any product, that has changed also a lot. I ask questions very similar to that. Okay. So I haven't seen a product yet which can handle the complex use cases anywhere close to what I have seen Palantir handling. Okay. A lot of use cases are built, but guys, under the hood, the kind of mess they are, okay, versus what they show in PowerPoint is a whole different story. So this shit really works.
Okay. Chris, it's your time to shine. Cardinal Health Partnership.
Well, before we go into the Cardinal Health Partnership, I wanted to clarify and just talk to you guys about what Sachin just said, how there are certain times where industries, even though they seem completely different, but the technologies can actually almost like cross collaborate, right? So what Sachin was talking about, especially in oil and natural gas drilling, right, is creating models based on the imaging data that they get, right? Radiology, we have this very similar thing. If you want to share my screen, I'll show you what I mean real quick. We can't hear you, Sachin. We can't hear you, Amit. Share, yeah.
Sorry. Okay.
There you go. So right now, what oil and natural gas, what they do is they take imaging data and what they do is they overlay it in a time series to figure out, okay, what is going on? Well, guess what? We do that in healthcare also. This right here, what you're looking at is something called a time of flight study when we do an MRI. And a time of flight study, what it does is we measure blood vessels, like, like arteries and veins in your blood, in your brain, and actually see how much blood is going across it, right? And then overlay it and then create a 3D map of it. Now, why is that relevant? Well, if you get a stroke and you have a blockage in the brain, we need to find out where it is, target it, and remove it, right? So that this way you're not going to die, right? So it's data like this that we've been utilizing for like 10 years, 12 years, but it's the same concept as you're taking an oil well, right? And you're trying to figure out where it is, what the seismic issues are, if there's any blockages, where is it? They use ultrasonics, we use MRIs for it. And it's interesting because what happens is all of this stuff ends up almost like, how do I explain it? It's one of those things that even though these things are researched independently, when you take it into like something like Palantir, they can actually end up being like cross-related, where you can actually have that inference data end up coming back and being able to identify different models. So this right here, what you're looking at is something called the circle of Willis that's in your brain. So these are all the arteries and veins that feed your brain, right? If you have any sort of blockages, so when Matt said, oh, well, you know what if a well goes down, it takes 5 months to come back online. We're on the opposite end of that train, where if there's a blockage in your brain, you die. So, these are the kind of cool things. And what I also wanted to show you guys real quick is I think a lot of people think AI is like going to be here in 5 years, 10 years, especially in healthcare. Let me just share. And this is a product I work with every day right now. Go ahead, load that screen. This right here is something called Viz AI. Viz AI is actually built on AWS. And what it does is we have imaging data that we send to Viz AI, and Viz AI uses AI and machine learning and algorithms to basically do an analysis on those images and actually identify strokes even before a doctor has got a chance to see it. And literally all the imaging data and the alerting system ends up going to all the neuro teams, like in the ICU, in the surgical area. All of that stuff goes right onto their cell phones and even their Apple Watches, right? So imagine right now you come to the ER and you're having an active stroke. Before, we would scan you, we would send the data to a radiologist. The radiologist would look at the images, say, oh yeah, you have a stroke. And then the teams would get alerted. Right now, literally, you get put on the table, the CT machine reads your brain, sends the images to a server. Server overlays all the AI on top of it, figures out if you're having a stroke or not, sends an alert to all the team who's like on call at the time, and literally within 5 minutes, the minute you get off of that CT table, the OR is already prepped, ready to go to take care of you and remove the blockage, so that this way, and it's a timed thing. Like if you have a block in your brain, you could die, and if you don't die, every minute additional that vessel stays blocked, she was going to die. And so these are the kinds of things that like literally we can react much, much faster than ever before. And it's all thanks to AI. So I would say AI is no longer in a place where it's on the sidelines or in the outer edges of how businesses and organizations operate, whether that be in healthcare or oil and natural gas. It's starting to become a core part of how businesses operate. And I think that's going to be big. And especially if Palantir can literally organize that and figure out a way to get into certain industries and create use cases for it, it could end up being, I don't think the TAM is 5 billion. I mean, what is it, 500 billion you said?
900.
I think it's unlimited, to be honest with you. This is weird.
So wait, hold on. So, and Chris, the reason you haven't bought back in yet is because your execution is what's scaring you.
Yeah, well, I wouldn't say I would say over
Because
the last
Chris, at this point, it's been 6, 7, 5. It's been in the range, right? I know you have other positions, but if you speak so highly of an unlimited TAM, it's got to be the execution that's making you
obviously. Just because there is a large TAM out there doesn't necessarily mean that Palantir is going to be the one that captures it wholly, right? You have to take everything into perspective. And I think Palantir right now is making the changes necessary in order to become a major player in that unlimited TAM space. So I do think that Palantir provides a tremendous amount of value. And that's the thing we'll talk about next with Cardinal Health. Medical supplies and logistics have always been one of the most difficult things to deal with in healthcare. And the reason why your healthcare, believe it or not, everyone here, especially in the United States, has been so expensive.
Are we transitioning to Cardinal right now? We're doing the transition?
Yeah.
Okay, go ahead.
Yeah.
You got it.
The reason why it's been so expensive is because the healthcare supplies are literally a logistical nightmare. Okay. When it comes down to it, you have all sorts of players making products that go into healthcare, right? Different sizes of things, different products. There's always new stuff coming. So how do you optimize that supply chain? Well, number one, you need to have AI a little bit introduced and actually put into an organization that's almost like central to the entire business. So Cardinal Health, for anyone that doesn't know, look up Cardinal Health, how much revenue they generate. So Cardinal Health is actually one of the big three in healthcare when it comes to medical supplies and logistics. The three main ones.
162 billion.
For what?
For Cardinal Health.
Yeah.
2021.
Yep. Look at how much it is right now on a quarterly basis, how much money they generate in revenue.
So trailing 12 months, September 30th, 2022 is 186 billion. On the quarter, see if I can get that, 49 billion.
Yeah. So you can see how that is always growing. So the thing with Cardinal Health is they're one of the big three: Cardinal Health, AmerisourceBergen, and McKesson. Those three companies pretty much do all the medical supplies and logistics for the entire country. So basically right now, all the manufacturers, they make products, they make healthcare products, they make pharmaceutical drugs. If you are going to order stuff, you usually order it through one person. Usually it's through either Cardinal, McKesson, or AmerisourceBergen. So think of it as almost like the Costco's of the healthcare industry, right? Think about all the moving parts that happens, like how many vendors and suppliers there are. It's crazy amount, right? So right now they're doing almost $200 billion of revenue. So imagine a 1 to 2% efficiency in terms of margin gain. One of the things that sucks is that their business, even though they do 200 billion in revenue, their net income, I think for the quarter, is like $200 million. It's not much.
So Chris, I have a question. So let me take the case of Cardinal and let me know from your experience. So let's say Cardinal is pretty efficient in what they are doing and how to use.
No, they're not.
Or how efficient in how to use their contractor. So let's say Palantir says we can help you in this way, and Cardinal actually delivers. Okay, and for the sake of argument, let's say they deliver 5% efficiency. Okay, so when I say 5% efficiency, in a way that means either you can take it as in revenue a beat. Okay, that means instead of 49 billion, they suddenly start doing revenue that is 51 billion, because they can use the same capacity to deliver more value out of it. So just for the sake of argument. And by doing that, let's say they are doing 8 billion. Now, you said it is one out of big three. Okay, that means there are other two also. Okay, it's a red ocean. It's a very highly contested markets with low margins at times as well. So what they will do now? I mean, are they forced to use Palantir? That they see, okay, with Palantir suddenly would you say that one of, or at least both of them, will be forced to use Palantir at some point of time if Palantir deliver values with Cardinal?
So I think this is where you need Palantir to basically not really work with the competitors, but work with the counterparties that they have relationships with. These guys have relationships with almost every hospital network in the country. So if you can offer better pricing on supplies because you're more capital efficient and the way that you're organizing your supplies, the way that you're warehousing them, the way that you're transporting them, and also creating a seamless, like a demand workflow, like coming in and going out based on patient healthcare data. What you would do is literally the hospital system would integrate with Cardinal Health and be very efficient, saying, okay, you want to do something called just-in-time ordering, right? So this way, you're not trying to store up all these drugs, all these medical supplies in a warehouse for a prolonged period of time, and then they expire, and literally it's worthless after that. Like, I've actually seen that happen at hospitals where they've had to over order stuff, keep it on shelves, and then guess what? There weren't enough sick people that quarter, so and the stuff expired, so they have to throw it away. These are like products that are like $1,000, $2,000, sometimes even more than that at a time. And imagine right now the cost that you have to bear. Like, imagine ordering something that's $5,000 because it comes in a pack of 5, and literally each one of those, like, let's say catheters that's super selective, each one is $1,000. Well, guess what? You only needed one. You ordered a box because the vendor only sells it in a box, and the other 4 expire, right? That means you literally paid $5,000 for a product that you only got $1,000 value out of. Well, if you integrate with Cardinal and say, okay, look, I am going to set my par level much lower. I'm only going to have a 1 or 2 par level for this product. That means that Cardinal is going to be alerted the minute that your par level drops down to 2 of that product. Automatically, there's going to be an order that's put into Cardinal, and Cardinal is going to send you those supplies, so that this way your par level's back up to normal again, without having to have someone go around and count. Oh yeah, we have this product. We only have 2 left. Okay, let me order more.
Chris, why do you think this is a much bigger deal than just another way Palantir saves a company some money? Why is it bigger than that?
Because the amount of counterparties that Cardinal has is crazy. Okay, so what happens is, imagine right now you're a hospital, you're Cardinal. You work with so many hospital systems and so many hospitals that now what you're able to do is provide them a service. But then if that counterparty sees the value in it, they're also going to have, like, you're almost going to have like a door into that business, saying, look, because you use this product, you really liked it, let's integrate Palantir into the other side of the equation. So here's an example: Airbus, right? Airbus was the original partner for Palantir, so that you can create its healthcare suite and all this, not healthcare suite, like the plane monitoring suite. And then Airbus was able to sell that to the airlines, right?
Yeah.
So now all these airlines have Palantir working through Skywise. Imagine right now Cardinal and Palantir create an inventory management tool that directly inferences ordering and budgeting supplies with Cardinal. So now, same thing happens, the same logic. Cardinal is able to sell the hospital system an inventory management system, right? That's directly inferenced into Cardinal's original stuff, and basically be like, listen, from now on, guess what? You don't have to worry about figuring out how much supplies you need. And also from our end, making sure that we have those supplies on hand. Now everything can be seamless. So the minute that there's a shortage at the hospital, Cardinal already knows it and is already sending you those supplies before you even know it, or even has it medically, or even has it positioned close to you. So that this way, if let's say you put an order in, it's not going to take them 2 weeks or 3 weeks to get it to you. It's literally going to be within a day or 2. You know, these are the kinds of things that Amazon does, but Amazon has a much more developed AI system. So this enables Cardinal to have a very similar system. So now they can do demand forecasting, they can do categorization, and basically end up, instead of wasting so much money on other parts, end up taking that savings and doing one of 2 things: giving it back to the end customers, like the hospitals, right? Or split it with them, so that this way it's almost like, oh, look, we were able to save $1 billion. Here's a little bit of money here. Here's a little bit of money here. And they end up doing really well.
So it's a unique go-to-market distribution strategy with Cardinal that could have network effects. It's exciting.
How do you know that one of the hospitals that Palantir is already working with isn't the one that sold it to Cardinal Health?
That's a key. I don't know. I don't know, but I think this is definitely a very underappreciated use case that I've been trying to wrap my head around why Palantir hasn't done the deal. I honestly thought that McKesson, Cardinal, and Amerisource Bergen already had internal tooling like this, that they already had something going on. But speaking to a few people, they don't. They're literally just, okay, this is our warehouse. This is what we have. This is what the customer ordered. This is what we're going to give to them. There's
So
no
during the
yeah.
pandemic, they're everything must have been crazy because of all the stuff they had to manage, right?
And here's the thing: you don't know the craziness of downstream effects that people don't even realize. Here's an example: a lot of the saline that we get in the hospital systems, all of that stuff comes from Puerto Rico. When Puerto Rico was hit by multiple hurricanes and all that stuff was down, there was a nationwide shortage of saline, right? There's sometimes, if you look at it, my wife's a pharmacist, she'll tell you there's nationwide shortages of drugs at times. So now you have to figure out how you're going to source these products. You're going to bill for, like, how you're going to do it. And then on top of it, there's a billing aspect to this, all this stuff too. This is a very complex, heavily regulated field that I think if Palantir can help like solve, could be multi-billion dollar deals like per year that come their way. But it all depends on how they're going to execute. I think this is a first step towards actually becoming a default operating system for the medical supplies logistics architecture for the entire country, if they're able to do it successfully. And I'm pretty sure they're going to be able to do it because they did it during the pandemic when it came to PPE distribution.
You know? I think one of the challenges that you might be talking about, Chris, specifically is in maybe some of the headwinds that they've already faced is having to implement something like this is a massive cultural change for a lot of organizations, where you literally have to rely very heavily on some of the systems that are built. And I think sometimes it's very uneasy. Like, I know when I went through it in 2017, having to deal with these guys, it's like, it's changing the way you work, right? And so you get used to doing something for, say, 5-10 years. Luckily at that time, I was only an engineer for like 3-4 years out of college. So it was easy for me to transition. But imagine some of these old timers that have been doing something for 20-30 years, and some of the contracts that they may have built, or some of the under backdoor dealings. You know, when you're talking about $198 billion at TTM, think about how many different backdoor dealings are kind of going on that are now going to be, I guess, brought to light, that will no longer kind of be done in the background, you know. And I think a lot of people don't recognize that when you're dealing with a lot of these things, like, people can sneak away with $100 million here or $100,000 here. That no longer is going to be the case. And very often as well, sometimes it requires people to go back to work because, you know, things are going to be more efficient when you're thinking about things like that. And I think also some people might be thinking specifically about, what is this going to mean for my job in 5-10 years if I implement a product like this? Think about how much more efficient everything that you're talking about is, right? In a hospital specifically, you're not going to have people that need to go around, you know, once a quarter for a week to outline how much additional supplies they have before they need to order more. That's somebody's job that unfortunately gets impacted at the end of the day. And so when you're talking about Palantir, great for the company. Obviously, that means more revenue for them, and great for the overall business that is implementing it. But I think the people that make the decisions within the organization are sometimes very scared when a company like Palantir comes around for that particular reason. People that are okay with making things more efficient and love the efficiency aspect of things. But I'd love to hear Sachin's kind of opinion on this, because I'm sure he's, you know, working in the technology consulting aspect of the upstream business, and maybe you, Chris, as well. Trying to implement a new technology is like pulling teeth in any sort of organization. So I experienced it firsthand, and I'm sure you guys have as well.
Now, there's one other thing that Palantir has that's very unique to all of this. Not only can you forecast demand, but you can integrate this into an ERP system, right? Which means that now the ordering is no longer, you have to log on to different systems to do this. Literally, you just pull up Palantir, you click order, and literally It resolves the issue and actually puts in the order for you, does all this stuff. So believe it or not, can you share the screen real quick, Amit?
I doubt you'd even have to do that, Chris. I feel like if you just had a QR scanning system and it knows that you're using it, and
Yeah.
it gets, like you said, down to 2 parcels left, like
Yeah. So I was actually talking to Coach Strap about this specific thing about a month and a half ago, where literally he was asking, he was like, what are some of the use cases that you see in healthcare? And that's why I said, like, by the way, the best use case I came up with is medical product supply chain. It's so fragmented right now. Among every hospital, healthcare company, everyone is ordering or over ordering because there was no guarantee COVID might not return. A lot of the over ordering, right, in the industry.
Chris meant to exit out the thing and he clicked on himself. I can guarantee he meant to exit that out.
So in the meantime, Chris, come back. So the question is, this doesn't sound sexy, but just to give you an idea, that in most of the industry, 60 to 80% of working capital is tied in supply chain logistics. That means the money. See, we talk about capex and opex now, but where it is in the system. I mean, you are investing money, you are spending money, but where it is in the system. So 60 to 80% of it is in the supply chain logistics. So when every day we hear about the news that Palantir is doing this in supply chain logistics, the question is that why the fuck they are focusing on supply chain logistics than other things? Because this is where the real problem lies. That if you make your supply chain more predictable, that means the cash you need to carry, the inventory buildup you need to do, okay, the timing, you optimize on a lot of things. So the return and the gains that you get out of it is in multiples. I'll give you a very simple example, and I just it triggered my mind when Chris was saying, recently, like in Malaysia, we had suddenly a shortage of a lot of medicines. At least I observed, and people said there is a shortage. And I asked, like, what is happening here? They said a lot of these medicines are going to Singapore. I said, why? Said because of China lockdown, people are hoarding medicine in China, so a lot of people are taking medicine. Nobody can visualize these kind of scenarios now. But when this kind of the hoarding or the shortening of supply happen, there are some trigger events somewhere now. So if you know those trigger events, you can optimize your supply chain and everything quite well. So there is a lot of money that is stuck in the system like this. Okay, like for example, the moment you get a news of Everglade happening you need to run the simulation. Okay, what does it mean? What are the repercussions and the reverberations going to happen in market? That's where the supply chain logistics and how you can do it. You want to do it as a quantitative exercise, and you want to do it as an exercise which is very integrated using numerous sources of data. So if you don't have a system to access it, you don't take advantage of it. Now, it's not just about saving cost and increasing efficiency. It's about making competitive advantage over your peers who don't have this. So that's the game here.
Yeah, and there's also another aspect to it too, like where inventory, especially that's just sitting on shelves, is actually costing you money whether you use it or not, right? And especially right now with high interest rates, think about this way. If you're a business, you have $1 billion of inventory sitting around somewhere that's not sold yet. That's $1 billion. So every year, if there's $1 billion just sitting, that's $50 million that you're paying in interest charges. So if you're able to kind of reduce that inventory on hand because you're actually much better with your supply chain and logistics architecture, you can end up saving literally 25, 30, 40 billion dollars because you're not keeping as many things on hand because you have a system that's going to do all the routing for you. That's going to simplify. Like that's one of the use cases that they had with the Army, where literally the Army was allocating funds to certain projects and certain areas. But the thing is, they didn't know that they were going to need the money or they're not going to need the money. So what did Palantir do? They created a system where now if there's unallocated funds towards the end of the year, and then other areas that needed the money, they're able to optimize where that cash is going. So I think what a lot of people think is that the way that like an organization works is that everyone just runs off of one balance sheet and one pool of cash. And it's not like that. There's cost centers because that's how you manage projects. So if you have a cost center, you budget like, okay, this cost center has $1 million budget. So you're allowed to spend up to $1 million per year. Well, guess what? What if you only spend 500,000 and there's $500,000 left, and literally you're in your last, I don't know, 60 days. You know you're not going to need that money, but there might be someone else who's gone a little bit over budget who needs that money allocated to them. So now what can they do? They can just take that money, free it up, put it elsewhere in a bucket, and then this way they're able to actually pay for things on time, and they don't have like all this capital like just sitting around being allocated to resources and projects that not necessarily providing any value. And and when you think about it in terms of the billions of dollars mark, it's a huge amount of savings that literally Palantir ends up paying for itself. As long as the product can provide value and Palantir can show it to the client, I think Palantir is like an exponential return for most companies if they're able to integrate it properly. Their biggest challenge, in my opinion, has always been around how do they sell this to the client? You know, saying, look,
I mean, guys, if you are in 2006, 2008, I mean, I used to read articles on almost daily basis that people will say that why cloud computing is a passing fad. Okay, why there's so many security threats, why somebody will keep their data on the cloud. Okay, at that particular time, until 2009, even the companies like Google, I mean, they were struggling that should we launch a commercial business out of cloud computing, people will eventually do it. Okay, I mean, the AWS was the one that made leap of faith. There are a lot of things that people say that it will not happen, but they eventually happen. So this will happen. The question is always that Palantir can capture it. I don't know, like how many of you actually remember and worked in the industry in 2000. Those days, I mean, if you have used the old Windows machines, okay, you will know that how lame those were. And the idea is like if you are a real programmer and a real technical guy, you use Solaris. And the world was preparing that from Solaris or from Unix, we will move to Linux. Okay, but then on the other hand, suddenly what is happening is that if you do a simple technical task sitting on your desktop, then even though it is inefficient, people said, yeah, you just need to buy one machine, you are working there. So what happened at the end of the day, a lot of Linux became on the server side, Windows at the end of the became more on the front end. That's where you work. Nowadays, your laptop is your workstation and is your email. I mean, if people like me who started in industry almost like 2 decades back, you used to have a workstation and you used to have a laptop for email and other things. That's how the industry was those days. So this will happen. Okay, as a lot of things which we believe it looks difficult or unimaginable at this time because it's a big change. Okay, but there is a value that has been logged into it, so it will eventually happen. Whether Palantir takes a big pie of that cake, that is unknown to us at this point. We think it will be, but until and unless it does, it's all in cloud.
So this is where I like the comment that Hala Madrid just put, the clients will sell it to the other clients like FoundryCon. And this is what literally guys like Coach Up and screaming at the top of their lungs, do more of this, be out there, do more events where you can actually have, people come and learn about Palantir and Foundry, right? And it's
pretty amazing they're doing FoundryCon again after they just did it, right? It felt like they just
need to keep doing this. You need to keep putting yourself out there in the market. Let people know who you are.
So I got a message from, message from Palantir, one of the colleague that, okay, join the FoundryCon. This time this FoundryCon, we are bringing more of oil and gas companies. So that's what the message that came to me. So what I deducted from it is that they are doing a lot of FoundryCons with a very specific focus that let's try to club these kind of use cases and these kind of industries in this. Let's club these kind of use cases and industry for this reason. So the reason they are doing it is not random. I think it's a bit of focus. So this time I got a message last night. Okay, this FoundryCon is focused on oil and gas. Why don't you say it? And of course I got it. Some of my colleagues also have got it. I'll be watching it because given my industry and given the work we are doing. But that's my interpretation of why so many FoundryCon is happening.
Yeah, and any protesters who are going to go to it, you guys are all Russians. Fuck you. That's what I'm going to tell you. All right? You all fucking hate Ukraine and you're a bunch of Russian bots. All you protesters who think Palantir is all sorts of negative whatever, that they're a spyware company, all you guys are Russian bots.
And that's how we end the pod. Boom. There we go. That was cool. All right, this is awesome. Sachin, first of all, thank you. I think you did a really, really good job summarizing and breaking this down again. Chris, awesome stuff on the Cardinal Health stuff, just like really breaking down what it means for healthcare. Matt, you looked sexy all night. That's all you needed to do, so that was great.
That's what I do best, man.
That's what you do best. And 190 people, thank you for being here. 200 just now, being with us all night. Everyone's links are in the description. It would mean the world to us if you subscribe to everyone here on YouTube. Just takes 2 seconds, and follow us on Twitter. We do this every night for you guys. You guys are the only reason it's not fun talking to 5 people. It's fun talking to 200. So would really appreciate if you guys follow everyone. Everyone's links in the description.
Bro,
yeah.
what's with your camera that only lasts like 15 minutes a pod? Like, what's going on?
Lasts longer than I do, that's for sure.
What camera is that, Amit?
No, it's a Sony a6400. It gets hot after.
Oh
40 minutes.
yeah. So you can go into the settings and you can change it. So there is a setting that you can override about heat, so it can override
really?
that part. Yeah, there is something in the setting.
Also, you don't need to stream at 4K. Like, don't have it on 4K because
Have
like,
it at 720.
4K
Yeah.
is fun. It's like
No, because the 4K is not coming across YouTube. There's no
Yeah.
4K YouTube. It all tops out at 180p, bro.
Oh,
And
So,
another thing is,
yeah.
I mean,
Oh, you mean StreamYard? Yeah.
Yeah.
So
Yeah.
A6400, especially for live stream, I think that's the issue. I mean, there are other. I mean, like I would say that when you have next tranche of money with you, either go for a high end like FX30,
Mhm.
or you go for really compact like ZV1 or ZV10.
Yeah,
Okay.
that's what I have. That's what I have.
And so there's a setting where I can overwrite the heating and it doesn't die, or it doesn't.
Yeah.
overheat.
So it does.
Bro,
There's a
just
setting
stop doing
go.
4K. Just stop doing 4K and you'll be
Yeah.
fine. That
Or
the
let's just
reason why
have a
nobody takes
Logitech
4K.
Brio, man. I mean, I have ZV1, but I don't use it for. I mean, I use Logitech Brio. It works fine, man.
Okay, sounds good.
Get rid of that
There we go.
ugly. Get rid of that ugly coat, bro. You
Oh
like
wait,
the
hold
dude-
on.
Now this is huge Hefner. He's on the way to become
I
huge
know.
Hefner, man.
Chris, so you used to have a Palantir logo in the back. I
Yeah.
have a Palantir thing that was sent to me by a fan named Ken Bohorsky. Okay, and he explicitly told me on LinkedIn today to tell Chris that the thing he made was way better than whatever you had in the background. And so
I'm sure it was, man. I'm sure it
That-
was.
that's why it's here. Ken, I just want to give a quick shout out to his business. It's called Reverberate. I'm going to put it in the chat real quick. If anyone wants to check it out, I think they do these custom. They do it for a lot of different products. He sent it for me for free. He also sent me an extra one that I gave to a fan. So if anyone wants to check it out, it's really cool that people are following the podcast that much that they're willing to send stuff like
you
this.
should get one of those and send it to Carp. See if he'll sign it and send it back to you.
That would actually be pretty cool if he ever did that. That would be pretty dope.
Or he'll sue you for copyright. Whichever one, though.
No, he will not do that. I mean, that much. I think these guys are already hungry for right branding and promotion. They will not do that, man.
Bro,
Well, I'll
we're
tell
the
you guys.
king- yeah.
Go ahead. I
was gonna say we're the king of bag holders, bro. We have attracted more bag holders to Palantir than anyone else.
So, guys, one last thing I would like to say. I think to me, because this is one of the most important thing is everything we say about Palantir. Okay, we see a lot of these deals are happening, and then we go and we see that okay, what the fuck is happening with the stock and what. So, guys, my objective is very clear about it. Until and unless I see a 30%, 40% revenue surprise, my understanding is that the risk on the go-to market on Palantir is high, at least in my assessment. So until and unless I start seeing quarter after quarter beat by 30%, 40%, I would keep that go-to market risk high. So I understand that I am pretty exposed in this point of view, but that is my marker. Because everything is going fine. Everybody is talking good about it. We understand the product. We think it's a super product. Okay, big companies are signing it. But guys, all of this only matter when at the end of the day, they will turn it into revenue. So until then, any criticism on the company, any criticism on holding, everything is fair. Because the revenue has not been delivered in that proportion. So that's, until and then
on the flip side, being the bag holder and dealing with all this stuff when there is all this uncertainty and understanding the risks, that is where you get to participate in the upside of the company and the reward, and you're not chasing it at $20, $30, $40 because they're having the growth, because you were there at 7, and even though you bought it at 18, you were DCAing. It's the classic story. The question is Palantir going to play out? And if you're here tonight and you have a position and it plays out, then you get to enjoy in that upside.
Yeah. So at this point, in my opinion, Palantir is still a high risk reward situation. Your risk is high. I mean, risk everybody will assess in their own view. But when you look in terms of go-to-market execution, the risk is high, in my opinion, on Palantir. No, no sweet talk around it.
Okay. I wouldn't say high, personally. I would say more medium, because I do think that they make pretty decent cash flow from operations. But until they're profitable, I don't think it's going to go to a low risk or a lower risk, low to medium size risk until you kind of get to the profitable state.
I agree with Matt, because the price, you got to remember, risk in terms of execution risk and is also dependent on the stock price and market cap. So at 30, if let's say Palantir is $30 right now, yeah, that's speculative. So why would you pay $30 a share at almost like a $40 billion market cap for a company that's growing barely 20% a year?
Like, and we all paid $30 when it was growing at a slow rate, and it was
hold on,
we all have a lot somewhere with $13.
Sachin, hold on. No. They were no. Like, apples to apples, they were growing at almost 80-90% at the time.
That time their growth was high. I agree.
So it wasn't like, oh my God, we're a bunch of idiots who just invested. No, we thought that this growth potential was gonna literally cascade into it and be able to go down.
Yeah, that's fair.
Who would have thought it was going to literally go year over year and then it goes down to 20% growth, right? That's the problem. When you have a company that's right now, it's fairly valued. I think Palantir right now, if you're buying right now, there's very little opportunity for you to lose money. The only opportunity that I think you're going to lose is opportunity somewhere else. If there's other companies that are performing that you might have risk adjusted, but in terms of risk adjusted returns, Palantir is a great value at this point. You still have a business that's growing. It's still out there. It's got a huge total addressable market. The product is good. The clients love it. So I think at this price, yeah, it's actually fairly valued. I wouldn't say it's undervalued, but I wouldn't say it's overvalued either.
And guys, remember, companies like Palantir and SpaceX, US government will never let them fail because they are critical for the US stability. So if there is a risk, if you think the US government will let these companies, this is a discussion which I cannot go in detail, but there are certain companies, they will always be protected. Okay. And this is one of the reasons, and they will be protected when it needed by big money. And reason is very simple, because they are very critical to what US government does. If you take SpaceX out, you will lose a lot of edge in what the US has built in terms of space economy, okay, especially in private. If you take Palantir out, okay, there is a lot of exposure in the front line that the US will have, which they cannot afford at this time. So these two companies will never be allowed to fail.
Yeah, and Sachin, no more. We don't even have the Russians anymore that we can actually piggyback on anymore. Yep. Now SpaceX is the only name in town when it gets to getting to space. NASA is literally like, hey, we got SpaceX. That's the only reason why we're not fucked right now, basically. And
I learned it very hard. I learned it because I was proposing at one point an acquisition of a company, and then I was told from behind that, guys, you will not be allowed to acquire this company. This is US critical. Okay. I mean, it's private, whatever it is, but this will never be allowed. So whatever that happened, that time I started learning about it, that there are some US critical companies. Okay. And it will be always ensured that they don't fail and they don't fall into wrong hand. And in my opinion, Palantir is one of those companies.
Is Rocket Lab one of those companies? Because they technically can't put anyone in space yet, just equipment and just satellites.
No, I don't think so. I mean, I like Rocket Lab a lot. What they do, okay, is very impressive. Okay. But their efficiency, their advantage at this point is cost. Okay. Yeah. They are not as nimble as SpaceX is.
SpaceX, yeah.
Okay?
Yeah.
But they are also going for a market which is on the lower side. The challenge which nobody has, I think this is one of the biggest things I think everybody has to remember, is because SpaceX has an internal client, Starlink, who is such a large consumer of their own services, it is very difficult to beat it when it comes for costing. It is the same advantage that Amazon has when you talk about e-commerce. Okay. And in this particular case, it's not like this that you create a software firewall and you can create Alibaba to counter it. I mean, it's a physical engineering, man. It's no longer computer engineering of writing codes going on. It is physical engineering. You need to put things in space. So yeah, it's fucking rocket science. So the barriers to entry in companies like this is way more than what we talk about in e-commerce or in software industry. So these companies will never be allowed to fail.
So how come you don't have a position at Rocket Lab? Sorry, I know Amit wants to cancel or end the.
No, we can go. You got to get your little Rocket Lab questions in.
I'm curious.
So I don't have a position in Rocket Lab because first I wanted to be in the company when it was private. It didn't happen. Then I increased my position over the time in SpaceX. Okay. Then there was another couple of companies I wanted to have the position in space. But then what happened is that the fund I work with is also have position in them. So it's a conflict of interest. So if you join some company, you already have a position, you declare and you say, okay, I already have a position. Okay, but when you are a director at some place, you have to have a registration license with authority and everything. You disclose everything. Okay, so the fund I work with, we have a specific theme of space where we invest in space, emerging space companies. Okay, so that is one of the reasons. So luckily, I had already SpaceX position by then. And luckily, I had a SpaceX position even 2 rounds before they had.
Boycotting all of Amit's podcasts until he freaking improves that mic. I already told him to switch out that interface. That's right. Use it. Use the damn interface.
You got to connect this.
How's my mic?
Right.
I don't know. I just bought this bad boy a couple months ago. I don't know if it's any good or what.
That's a good mic.
Blue Yeti?
This is coming very good.
Yeah, it's a Yeti.
Yeah.
All right. Well, that's it for us. Thank you, everybody, for being here. Check out the links in the descriptions. Follow, subscribe. We love you guys.
Thank you, guys.
See you next week on Palantir
Guys,
Week.
stay safe. Bye.
Good night.
Cheers.